Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Wednesday, October 2nd, 5:52 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. Fighting the good fight against non-cooperative computer hardware, but here we are. So, state of the market, we're in an uptrend. You can see by the trend gauge in the upper right of the screen, we've got the coveted four green arrows, meaning market leaders acting well, and all five of the major indexes above their short-term 21-day, medium-term 50-day, and long-term 200-day moving average. So, what happened today? Uh, Tension in the Middle East, again carrying overnight, gap down about a 0.25% on the S&P and on the Nasdaq 100, a little worse on small caps, and sold off immediately from that gap down, but found support at that key level that we've been emphasizing for the last few weeks for the second day in a row, undercut of yesterday's low, and then a reclaim back above this very key support band again. We'll reinforce this when we bring up the index charts, but as long as we hold that level, and now the 21-day moving average on the S&P 500 is in the middle of that support range, it's an additional piece of good news. And as long as we hold that key level, there's really nothing to be overly concerned about from a bearish standpoint. We'll give our index longs room to breathe. We added some back today after getting stopped on some yesterday, and let our individual names operate on their own merit. They don't cooperate, they will get sold. But as long as they hold their moving averages, every day we tick up the stops as the moving averages rise. Eventually, we'll get stopped on everything. That's just the way it works. But we size initially against the 8 EMA, and then if the 8 EMA gets above the cost, we look to the 21 EMA. The 21 EMA gets above the cost, then we move the stop below the 21. 50-day moving average gets below the cost. Now we're talking about a winner. Then we can move our stop below that level and just keep climbing them up. The best of the best will continue to ride higher, and those that won't will get stopped. But of course, the market always has a lot to say about that. So here are the final numbers. A lot of yellow on here, meaning closes plus or minus 0.1%, but all in all, a positive day as but again, another test of support. Every time you bang on support, it gets a little bit weaker. So really, we need to move off of this level and challenge the highs from last week. 21 over 21 list down an average of 1.6%. 9 up, 11 down, 1 neutral. The big 8 down an average of 0.42%, but this was made much worse by Tesla being down 3.5% as they reported their numbers for the prior month. And although they beat the headline, there was a whisper number that they came in light against, and that sold off a bit. Still holding on R as it bounced at the 21-day moving average, right where you would want it to. So we're still in our Tesla position. RG8 up fractionally. S&P 500 basically flat. RSP down 0.1%. Nasdaq 100 up 0.14. Equal weight a little bit better. The Dow, the mid caps, both up about 0.1%. Russell 2000 down about 0.1%. Global 60/40. Stop me if you've heard this. Yellow just up 0.05%. Our flagship portfolio, GROTECTION, up just 0.01% on the day. So a lot of neutral closes, but all in all, we've given it the green arrow here as we held support. That's what we want to see. Market doesn't go straight up. Got to show some patience sometimes. So here's the S&P 500. And you can see breaking below the 8 EMA yesterday. Another close just barely below it at less than 0.1%. Holding above the 21-day moving average. Let's go to a 60-minute chart here. And let's draw some lines. And this is that 56, 50-ish, 56, 60-ish level. And then that failed breakout 56.90, tested a couple times, tested again today, twice yesterday, still above it. So 56.60 to 56.90. Actually, it's 56.52, I think, is the precise level that we're talking. Uh, but this is the level that needs to hold. And obviously, the bulls want to get a bounce and above there. These next 2 weeks, there's a saying in the market. I think it's sell Rosh Hashanah, buy Yom Kippur. Those are Jewish holidays. Uh, that's right smack in the middle of this 2 week seasonally week period in election years. We're in the middle of these 2 weeks right now, so hopefully we can survive this. We're aware of seasonality. We treat it as a secondary indicator, um, and it's pretty clear. This support band, we hold it good, we break it bad. Back to the daily and on to the NASDAQ 100. A little bit weaker. You can see one of the keys we've been talking about is this 485.54 pivot. We poked our head above it twice, 3 times last week, close below it yesterday, bounced at the 21 today, still below it. We want to get back above that level. Tesla again gave this no help today. You can see the relative strength lagging just a bit. Dow Jones Industrial Average holding that 42,000 level. S&P 400 mid cap bouncing at the 21-day moving average, and the Russell 2000 small cap undercutting, but for the second day holding that 21-day moving average. Equal weight S&P 500. I might as well start saying six major indexes because we do pay a lot of attention to this. Just riding around the 8-day didn't even get down to the 21-day when this is outperforming, or when this is looking better than the chart of the market cap weighted. That usually indicates that the NASDAQ 100 type names, the big tech names, are lagging a bit and money is rotating more into value. And that is certainly what we've been seeing as of late. All right, on to some other charts. Inter-asset correlation charts. The VIX, big spike up yesterday on Israel, Iran, Lebanon tensions, pulled back a bit today. 1890. We want to see this get down closer to or below 16. The US dollar, this has been one of our keys as well, as this had a change in character the last 2 days by breaking above the 21-day moving average. Frequently, you see when there's times of tension in the world that money flows into the US dollar. This, unfortunately, is not bullish for US equities. That we prefer a weaker dollar, weaker but not too weak, kind of like Goldilocks. But we are keeping an eye on this back above the 21-day moving average. Again, it's a secondary indicator, but it does factor into the overall weight and overall big picture. Onto the precious metals, gold bouncing off the 8 EMA, slightly positive on the day. GDX uh, holding above the 21-day moving average. Silver moved today, up 1.5%, right near the top of this flat base. Definitely something to keep an eye on here. This is a nice consolidation for silver. Bitcoin was having a decent day, sold off late in the day, and broke below the 21 and 50-day moving averages. So this big strength last week, it's now filled that gap. Another disappointment, another tease, we'll call it, for Bitcoin. See how it continues to make lower highs. We need a change in that. We need to start making higher highs, and then this is a very bullish consolidation in the big picture. Well, you can't show the big picture because we're showing IBIT here. Bitcoin onto bonds. BND, broad bond index, down on the day, but closed at the top of the range. Prices down means yields up. Here's the TLT. Down on the day again, prices down means yields up. Here's the TYX. And this has been up ever since the Fed cut the short-term interest rate. Fed can only control the short end of the curve. The market controls the long end of the curve. TNX, the 10-year, up also on the day. That's our inter-asset correlation. Let's go to the tail of the tape. Few changes here. The stochastics are not as bullish as they were. We've got four trying to hook down off of overbought. Small caps have already done that. RG8 is mixed, very similar. Coming there, they hit overbought and rolling over. Same with the NASI RSI, never quite got into overbought and is now flat. The dollar rising, that's a red arrow, meaning it's rising, but it's not good for stocks. TNX, TYX in overbought, interest rates overbought. Uh, Fear and greed, we talked about. When this is in yellow, we consider extreme fear or extreme greed only, and they are otherwise it's going to be in yellow. And those are contrarian indicators, just the same way that the AAII and NAAIM numbers are contrarian. The magic number here is bulls minus bears. If that is 32 or above, that is a strong contrarian sell signal. It means there's too many bulls and not enough bears. NAAIM up over 100. That's also a very strong contrarian signal. Right now, we're not there. We get updated stats on these every Thursday. So we're on. I'm going to spend a little bit more time on this because I've had some people asking some questions. They don't understand my shorthand, and why should they? It's my shorthand, and it means something to me. I try to make it mean something to you, but I'll explain the things that aren't clear. So today, ADP, private jobs added, came in above expectations. On Friday, we get the government jobs report, the non-farm payroll report that you cannot trust in any way, shape, or form because they constantly revise it. Most recently, down by 800,000 jobs a few months ago. So typical government. Never mind. I won't get off on a tangent there. He's coming into today, three of them. What's the S&P doing against this 56.52 to 56.90 breakout? Now support level, undercut and reclaim. That's a positive. NASDAQ 100 against this cup and handle pivot, second day below the pivot. US dollar against the 21-day moving average, second day above it. That's red. Both of those things obviously negative. Day count, consolidation day after one day down, second close below the 8 EMA, and the slope of the line is basically flat now, but 16 days above the 21-day moving average as we continue to bounce at that level, and that keeps our expectations positive for the S&P and the NASDAQ 100. Intraday action today was, as I said, that sell off early, but then we bounced and then a 5-hour tight base. And that tight base was supported. Several times we tried to pull back, but supported at the top of this range, 56.97, pull back once, 56.99. Let's look at that real quick. Let's go to an S&P 500 5-minute chart, and you can see the gap down, the sell off right away, undercut yesterday's low, got back into that range, that 56.90. So undercut and reclaim that. And then twice in the afternoon, we pulled back but held above the top of that range. That's good. Notice we broke into this range several times yesterday, but broke above it by the end of the day. So the bulls are trying and the bears are trying. It's a tug of war. But right now, as long as we hold above that level, the market gets the benefit of the doubt. Sector strong today. Oh, also S&P 500 ATR, it's dropping. Actually, it's kind of holding steady about this 1.1 to 1.15-ish level, a little higher than we would like it to be. We want this to be below a 1. Less volatility is good for the market. Intraday traders obviously would prefer the volatility, but not position traders and index traders like us. Strong sectors today. Semiconductors after a terrible day yesterday. IGV, that software, XLK, tech, EEM, emerging markets as China continues to rock on the big government stimulus and a short squeeze. A lot of big funds were positioned short on China. Silver, uranium, copper, and oil also strong. So commodities looking good. The downside, ITB, that's home builders, XLP and XLY, that's staples, and discretionary. The discretionary, that sector is dominated by Tesla and Amazon. Portfolio changes. Trimmed some UPRO yesterday. As buys that we made over the last month, a little bit more, locked in again and took a very small loss on one of them. Bought that back today with SSO with the second undercut and reclaim. Very low risk entry here on the S&P using the bottom of that range, that 56.52-ish level as a stop. And we also added to Oracle, showing some relative strength today. Our volatility adjusted beta 1.68. Sorry. It dropped from 1.68 to 1.15 Monday to Tuesday, back up to 1.38 today. So the bottom line on the day, S&P 500 gap down, but it bounced again at that key support range. And the keys for tomorrow remain the same as today. S&P against that big level, NASDAQ 100 against the cup and handle pivot, and the US dollar against the 21-day moving average. Let's take a look at some charts now. We'll go through the portfolio and then wrap it up. So here's everything that we own in-house right now. Kava looking to add some to this with an undercut and reclaim of the 21, pretty low risk entry with a stop below today's low. ITV Home Builders continues in a nice tight sideways range with an upward bias on relative strength. Flutter, 4 days down in a row, and this now breaking below the 8 EMA and basically filling the gap from this big move up when they raised guidance. Need some buyers to come in to this. Notice how volume has been creeping lower over the last couple of days while this pulls back. Oracle said we added to this today, going sideways, right around the 8 EMA, so low risk entry. Uber breaking below the 21, so they were close to our stop on this one. Tesla, rough day today, as I said, on the reported earnings after a rough day yesterday that undercut 250, but bounced in the afternoon, but did bounce at the 21-day today. So we got that going for us. MSTR was having a very strong day, sold off late when Bitcoin reversed, but is holding above the 8-day moving average. We did some offensive selling here at around 177. You can see over here there's a lot of resistance that it could not stay above. So we're looking to add some of this back at a lower price. And NVIDIA up a bit after hours as Jensen Huang, CEO, was on CNBC and said they're in full production on their new Blackwell chip and said the demand is insane and they're at least a year away from even being able to fulfill the needs, the demand for it. So this is a good spot for NVIDIA to bounce at the 50-day moving average. You can see how that's provided support over the last 3 weeks. Good low risk entry here. Certainly should not break below today's low. And CEG, we added this to the portfolio on Monday. Nice tight consolidation near the top of this range. And VRT also added this to the portfolio on Monday, breaking below this, above this declining tops trend line and above the 100 level. Very nice base on VRT. Palantir, we don't own it at the top of our watch list, though, after forming this nice sideways pattern after over the past 3 weeks. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. We hit a milestone again for assets under management at the last quarter, up to around 173 million. We thank each and every one of our clients for this, and it just goes to show that people like being able to participate in the market when it's going up and still be able to sleep at night because their people managing their money have a strong sell discipline to keep them out of trouble. These rules have dodged the COVID bear, they dodged the 2022 bear, and we're not perma bears by any stretch of the imagination. It's GROTECTION. It's designed to grow assets. I've had people tell me that as an active manager, uh, that criticizing them for not having a sell discipline, they say, "Oh, you're one of those bears. That means you never get the gains either." Okay, call our office and ask for our performance. There's a reason why we've grown from 20 million to 170 million over the past 6 years, and it's not because we suck at what we're doing. So, as I said, GROTECTION. Right now, we're in growth mode, following our rules. If we break the 21-day moving average and this big support band here, we would get more defensive. If we break the next level, we'll get a little bit more defensive, and so on and so forth. Not arguing with the market. But if we do break below this black line, the 200-day moving average, this is where all bear markets historically occur. And this is when we get the heck out of the way. Until then, we give the market the benefit of the doubt. 3 time frames and assessing leading stocks. That's how we do it here at Revere. And with that, I'll wrap it for Wednesday, October 2nd. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.